We have a moron at the head of the Fed. He's a moron.
There's a high-stakes power game going on in Washington, and its chief architect is U.S. President Donald Trump.
Yeah, he's not a smart guy.
Openly feuding with his own central bank chief Jerome Powell.
Because we have a stupid person at the Fed.
In a series of unprecedented public broadsides, President Trump has been hammering the Federal Reserve chairman.
Moron.
But this is more than just a personal grudge match. As articulated by veteran analyst Ed Yardeni, there is a method to this madness. Trump's relentless criticism of his own Fed chair is a deliberate strategy intended on driving down the value of the United States dollar. A weaker dollar that the president believes will help to boost American exports, shrink the trade deficit, and stimulate U.S. manufacturing. So what I want to do today is go over Trump's actions to weaken the U.S. dollar, take a look at the extent to which it's actually working, take a look at how that could backfire on the US president, and then discuss some implications. As we'll see today, whether or not Trump's weak dollar policy will work long term remains to be seen, but we will obviously continue to track how this feud with Powell plays out. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this weak dollar. On to Trump purposely tanking the value of the dollar. As mentioned, Ed Yardeni of Yardeni Research makes the point that Trump is purposely pushing down the value of the dollar in order to increase U.S. economic competitiveness and raise the price of U.S. imports. But how exactly does the president achieve this? Trump's tirade of tweets and public remarks targeting the Fed has a real market impact. Each verbal volley only heightens expectations that the Fed is going to bow to political pressure and ease monetary policy. Traders have learned to understand Trump's threats as an indication that looser monetary policies are coming in the future, and lower interest rates tend to weaken a currency's value. In the result, investors sell off US dollars trying to beat the market, as it were, and the value of the US dollar drops, dropping sharply this year by about 10%, a dramatic decline that may link directly to Trump's Fed-bashing campaign. Yardeni notes that Trump has found a way to achieve a weaker currency he's long wanted by publicly battering the Federal Reserve chairperson.
He's an idiot.
And it's very, very clear why the president would want this weak dollar policy in place. In fact, Trump has complained about the strength of the US dollar for years and years and years, noting that it undercuts US export competitiveness, swells the trade deficit, and hollows out manufacturing jobs. A weaker dollar, by contrast, should boost US exports, should make US goods more competitive on the world stage, make foreign goods pricier in the United States, which should help to promote exports, something that Trump's also trying to achieve in his tariff policy.
That's all good shit.
And yeah, Trump has stated explicitly that a weak greenback is central to his goal to make America great again. And there is some economic logic to Trump's thinking. All things being equal, a weaker currency will in fact affect trade flows. U.S. economic competitors like Germany, Japan, and China have benefited in the past from weaker currencies that help to prop up their export markets. Trump's tariffs on trading partners have been one way that he has attempted to level that playing field. Jawboning the dollar downward is in fact another. And Yardeni notes explicitly, Trump wants a weaker dollar to boost U.S. exports and depress U.S. imports. It's an informal currency war strategy. If you can't convince others to strengthen their currencies, you actively weaken your own.
Makes me want to burn this motherfucker down.
But some economists have noted that a weak dollar policy could indeed backfire. For one thing, as mentioned earlier, a weak dollar does make imports far more expensive. And if those imports are far more expensive, that's going to lead to higher inflation. And that higher inflation will make it even more difficult for the Federal Reserve to cut interest rates, something that Trump very much needs, something that Trump very much wants as a means of managing the ever-high U.S. debt.
Each point that he keeps it up is the equivalent of $300 billion.
And it's not just U.S. inflation that we need to worry about. There's also other ripple effects that can be brought onto the world stage due to the U.S. dollar's role as the global reserve currency. If the U.S. dollar continues to weaken, then those oil exporting states may want to get more of them in exchange for their oil, sending global energy prices upward. And again, as we just discussed, higher input costs, higher energy prices will lead could lead, but probably will lead, to higher inflation in the United States, yet again setting off that process of events that makes it even more difficult for the Federal Reserve to cut rates, which again the United States sorely needs as a means of debt management. Further, because so many governments, because so many central banks hold such large amounts of US dollars, because it is in fact still the global reserve currency, any instability could cause widespread instabilities in global markets, which we've been seeing ad nauseum already this year, with investors dumping dollars at a historic pace, wary of Trump's unpredictable, debt-fueled economic policies, leading some to question the US dollar's safe haven status. So, on the one hand, while Trump is pushing for this weak dollar policy as a means of bringing back manufacturing to the United States, on the other hand, because of the amount of debt taken out by the United States, now sitting at $37 trillion. These, what will likely become inflationary policies inherent in a weak dollar policy, will in fact make it even more difficult for the United States to cut interest rates. The weak dollar policy may work in the short term. It may work to make US exports even cheaper, make US exporters more competitive, but in the long term, it will likely bring inflationary pressures into the United States, actually making it more difficult for the Federal Reserve to cut interest rates. So, in summary, Ed Yardeni's provocative thesis that Trump is actually engaging in these very public feuds with Jerome Powell on purpose might give us some insight into the White House's economic thinking. Trump may very well be using his bully pulpit in tandem with tariff policy as a means of making exports more competitive. And by all accounts, judging by the weakness of the US dollar, those attempts are working. The Fed has adopted a more dovish tone. Some members of the FOMC are publicly discussing jumping ship. Markets are pricing in interest rate cuts, and the dollar has slid to multi-year lows.
That's all good shit.
A weaker dollar in turn is helping to foment U.S. exports, exactly the outcome Trump has sought since he first complained about an overvalued dollar years ago. But this strategy is definitely a difficult needle to thread. Pounding Powell may indeed pound the dollar, as Yardeni says, but it also chips away at U.S. credibility. The U.S. is effectively arguing that it can depreciate its currency on its own terms, without sparking uncontrolled inflation, a crisis of investor confidence, or retaliation from any of the U.S. trading partners, any of the holders of all of that outstanding U.S. debt. Whether or not this strategy of jawboning the value of the dollar downward while the US president waits for rate cuts will work long term remains to be seen. For now, the president appears unapologetic in his crusade to beat down the value of the dollar and to beat down the patience of the Fed Chair Powell.
We have a moron at the head of the Fed. He's a moron.
We will obviously continue to track how this weak dollar policy plays out on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.